Hey everyone! The latest trading session delivered a rough ride for Bigbear.Ai stock, as shares suddenly dropped and drew significant attention from traders. During the session, the stock slipped to around $3.95 and even briefly touched a low near $3.91. What made the move stand out was the unusually heavy trading activity accompanying the decline, suggesting that selling pressure increased sharply as the session progressed. At the beginning of the day, the stock actually opened slightly above $4, starting around $4.07. Early momentum even pushed the price higher to an intraday peak close to $4.19. But that strength did not last long. As the broader market environment turned negative, particularly for smaller technology companies, the stock began to lose momentum. The price slowly rolled over and eventually slipped below the key $4 level, ending the session much closer to the day's lows. Volume was another important part of the story. Trading activity was roughly 70% higher than the stock's average volume over the past 3 months. Moves like this often signal that large groups of investors are actively repositioning their portfolios. As the day unfolded, the stock moved from its early high near $4.19 down to around $3.91, marking a sharp intraday reversal. When we zoom out to the bigger picture, the stock is now trading far below its previous highs. Over the past year, Bigbear.Ai reached a peak price near $9.39. With the stock now trading below $4, that means it has fallen roughly 58% from that high. Such a large decline naturally raises questions among investors about the company's growth path and the broader sentiment around the stock. Options activity during the session also hinted at a more cautious outlook among some traders. There was notable interest in put options with a strike price around $4.50 expiring in mid-March. Put options are often used as a hedge or as a bearish bet, meaning some market participants were positioning themselves for further downside. Another factor contributing to the stock's volatility is its high beta, which sits around 3.46. In simple terms, a beta above 1 means a stock tends to move more aggressively than the overall market. A beta above 3 suggests that when sentiment changes, even slightly, the stock can swing dramatically in either direction. That level of volatility makes the stock particularly sensitive to shifts in investor confidence. Recent financial results have also played a role in shaping the market's reaction. For the fourth quarter of 2025, the company reported revenue of about $27.3 million. That figure represented a significant decline of roughly 38% compared with the same period the previous year. Although the company posted an adjusted loss of 1 cent per share, better than analysts' expectations of a 6-cent loss, the steep drop in revenue drew the most attention. Looking at the entire year of 2025, the company generated approximately $127 million in revenue, which was about 19% lower than the previous year. Over that same period, the company reported a trailing loss of around 82 cents per share. These numbers highlight that while the company is working through a strategic transition, profitability and consistent growth have not yet been achieved. Management, however, emphasized several positive developments. One of the biggest highlights was the company's financial position. By the end of the year, Bigbear.Ai reported about $462 million in cash and investments on its balance sheet. That level of liquidity gives the company some flexibility as it continues to invest in its business and pursue new opportunities. In addition, the company took steps to strengthen its balance sheet earlier in the year. In January, about $125 million worth of convertible notes due in 2029 were converted into equity. This move reduced the company's debt obligations and lowered the risk associated with those future payments. Operationally, one of the most encouraging indicators has been the company's backlog of contracts. Management reported that the backlog has expanded dramatically, more than tripling to exceed $400 million. This surge reflects several multi-year contract awards and partnerships. Among them is participation in a large procurement program led by the Federal Aviation Administration, which is valued at roughly $2.4 billion overall. Looking ahead, the company provided guidance suggesting that revenue in 2026 could land somewhere between $135 million and $165 million. If achieved, that would represent a return to growth compared with the most recent annual results. Despite those long-term prospects, the recent sell-off appears to be driven more by trading dynamics than by a single negative announcement. Market observers noted that the drop may reflect profit-taking after earlier gains combined with technical fatigue in the stock's chart. Broader market uncertainty, particularly concerns tied to geopolitical developments, has also pressured many smaller technology companies. The surge in trading volume during the decline is especially noteworthy. Some analysts pointed out that it was the highest level of activity since early February, when the stock experienced a dilution scare. Heavy volume during a price drop can sometimes indicate that larger institutional investors are reducing their positions or rotating into other sectors. Going forward, the key question for investors will be whether Bigbear.Ai can turn its growing backlog into real revenue growth. The company's contract pipeline suggests there is significant demand for its technology, particularly in AI-driven defense and analytics solutions. But the market will want to see that demand translate into consistent financial performance. In the short term, traders will likely focus on whether the stock can stabilize after breaking below the important $4 level on heavy volume. At the same time, longer-term investors will continue weighing the company's strong cash position and debt reduction efforts against the challenges of declining revenue and ongoing losses. For now, the stock sits at a critical crossroads, where improving fundamentals, expanding contracts, and investor sentiment will all play a role in determining what happens next. This is not finance advice.